Everyone. How are we doing today? This is your daily dose of financial news. Do me a favor, if you want to see what's going on in the market, go ahead and hit that subscribe button. Give me that thumbs up. As Grant Stephan says, smash that like button would be greatly appreciated. So, as we go forward, Thursdays, Thursday mornings specifically are a rough day, right? Just because it's when new unemployment claims come out. We had 2.44 million new unemployment claims. And again, that continues our downward trend, right? I think we peaked at 6.9. But again, I go back to the fact that the record unemployment for a week before this crisis was roughly 600,000 during the depths of the Great Great Recession. So again, still 4x what had historically been the worst ever. So interesting to see that. You got to see the S&P 500 is within a whisper of its 200-day moving average, right? Last I checked, the 200-day moving average is 2,999 roughly. When I was reading this morning, it was 2,976. So by my count, that's, what do you call that, 1%, roughly 1% from the 200-day moving average. Why that's important for me? It's simply not. But I know there's a lot of traders out there that look for resistance. First it's the 50-day, then it's the 200-day. And if it could break the 200-day moving average and hold, I'm guessing there's a whole bunch of algorithms that will come in and that will be the new floor. So don't know, not playing, won't play. Not a market that I understand, and it's okay. I don't have to understand the stock market. The fact that the stock market is so far ahead of Main Street is totally okay with me. And I am very glad if you guys stayed in the market, you have the opportunity, if you choose, to sell or hold. Because again, don't bet against America is something that Warren Buffett says all the time. And I agree with, as long as your hold period is long enough. So very, very cool. Again, lots of, kind of market moving news this morning. Starbucks came out. They had some aggressive numbers that they were going to be tracking to as far as quote unquote reopening, right? They have been doing drive through and curbside pickup for several weeks now in the US. And I'm happy to report that at least at Starbucks, they are tracking ahead of projections. They're still roughly 60% of pre-health event news or revenue, but shoot, that's a lot of drive-throughs and a lot of curbside pickup. So I think it's great news for Starbucks, and it's great news for the reopening, right? It's again, I want this opening to go well. I want the consumer to get out. I frankly want out of my house because again, in New York and California, we're kind of still shelter in place. So I wish everyone well. Talked about Georgia a lot several weeks ago, and last time I checked yesterday, doing great, Georgia. So keep it up. Keep it up. So the U.S. about 60%. China is about 80%. We realize China is about a month, 6 weeks ahead of the U.S. So again, the trend is positive. The trend is good. I will be looking for when companies report. We actually saw this at Home Depot, was the first company to report. But we got to realize that retail sales at or close to pre-health event is interesting. But what was the cost? I think we saw at Home Depot the cost or the expense of maintaining that revenue ate into profit margins pretty big. We saw some of that at Target as well. So again, I think this just points out that eventually, if this model holds, companies are going to raise prices. Nobody's going to do that this year, probably not even next year. But yes, we are going higher. It's 2.44, Daniel. Unemployment was not 4.4, it was 2.44 new filings as of this morning with an expectation of 2.4, so slightly ahead of expectations. Macy's Reported a loss of $1.1 billion. Again, I find these numbers like the kitchen sink quarter that we talked about, right? They were essentially shut down 3 weeks and they lost $1.1 billion. I mean, that's hard to do in 3 weeks, right? And just for grins, they made 200 million last year this quarter. So that's a $1.3 billion swing with 3 weeks of shutdown. That's a kitchen sink quarter. They're throwing stuff off their balance sheet onto their income statement, killing earnings per share. They're just flushing it, like I talked about in my kitchen sink quarter video. Best Buy. Best Buy, again, has been shut down. They have been doing appointment only. And, again, they're holding pretty strong. They had a wave of buyers, like, people buying computers and whatnot when this first happened. But they still held pretty strong. 81% of, last year revenue. Again, it was all curbside pickup. That's being flexible. But again, I go back to, the revenue earned from that is not going to be the same profit on the bottom line because curbside pickup has a different cost. You're also not probably selling as much high margin stuff, right? Most of us know that retailers keep, little things near the registers for us or our kids to pick up that have a lot of margin in them. That's not happening with curbside pickup. Again, May store. What is this? Oh yeah, stores are open by appointments. Oh, Tesla. Next up is Tesla. I don't know if you've seen this, but Tesla is having a spat with the state of California, threatening to move to Texas or Tulsa, Oklahoma, are the two areas I have heard. It is pretty clear that they are going to be building the Cybertruck out of state, which probably would have happened regardless. They are just looking to build capacity. Finally, somebody did a cost analysis on what it would take to build a new factory. They're estimating to take about $1 billion to sort of recreate the Fremont factory where Tesla currently builds somewhere else, and it would take about 18 months to get done. So it'll be interesting to see if Tesla really does lead, but it's years away from that happening. And frankly, Tesla is crushing it. They're releasing more and more products. So they're probably better served focusing on that. But again, the state of California is a very interesting place to run a business. High tax, lots of rules. So leaving could make total sense. Can you imagine the tax incentives another state would give Tesla? It'd be huge. It'd make up that $1 billion in a heartbeat. So it'll be interesting. Oil is fun to watch today. It's above 34. I've talked in past financial news videos that 32 is an important number. That's where you can actually bring back American, production. Right? It's at least quote unquote break even at 32 for most operators. So going to 34 is good. The reopenings are working. People are driving more. So that is very good. A lot of people were sitting on the sidelines to see if the oil contracts would go negative again. Once we were ready for it, it wasn't going to happen. So we should sort of expect that. April home sales. This is something I might do another video on or a live stream on later today because again, that's what I do, right? I buy and sell single family homes. That's what I think the best investment will be for the next decade. April home sales dropped 18%. Probably not surprising. I'm actually shocked it didn't fall further. So 18% month on month and then 17% year on year, right? So the spring selling season is starting off pretty slow. But here's the deal. Inventory fell 20%. So these again are national numbers. I've done a video in the last few days about national numbers meaning nothing. So please learn your numbers. I'm actually having a video going out at 8 or 8:30 this morning with me reviewing Fresno numbers with someone for you, right? Because if I'm talking about learning your numbers, I thought I should do a video looking at Fresno. So that's coming out this morning at 8 or 8:30. I recorded it late last night. But again, inventory fell more. So that just means supply and demand is still leaning towards a seller's market. Again, learn your market because it's not true in New York and California, or at least the Bay Area. Supply demand constraints had prices go up. 7.4%. Go figure, right? Go figure. And now posted a record of 286,800. Again, a national number, so be careful. The other thing that's happening is we're seeing a diversion in what people are buying. People are clearly moving away from condos, right? Again, I have said single family homes are going to be the place to be because people want space. And condos don't have space. I live in a condo, don't have my backyard, don't have a front yard. Single family homes fell 16.9%, just to give it scale, but condos were down 26.4%, right? So again, realize what is going on. Another thing that is very interesting with single family homes, and why we will probably have a second live stream on this later this morning, is 41% of the homes that were sold in the last 4 weeks had bidding wars. I would not have guessed that 8 weeks ago. And this is all because supply was just taken off the market, right? If you have 60 buyers and 40 sellers pre-crisis, and then it goes to 20 sellers but 50 buyers, it's still a seller's market, right? It's just smaller numbers. So it's interesting to see. Again, clearly we're seeing a difference between big city and suburbs. Suburbs are getting hammered with bidding wars, where the big cities are really having price drops, right? There's clearly an exodus from New York, clearly an exodus happening from LA in the Bay Area. Pretty interesting. Again, we've got to watch small business in this environment. Small business, at least historically, has been a driver of employment. Numbers that I saw this morning was historically, again, small businesses made up 2/3 of the employment base, and we are seeing destruction of small businesses. 31% of them have already stopped, and another 11% are on the cusp of saying, I'm not sure I can hold on much further. But again, the big retailers are winning, and they're having record highs. Amazon record high, Walmart up, Target up. So we're seeing the big box retailers who have an online presence and a way to move forward winning. When the big box retailers were called essential and the mom and pop store wasn't, what should we expect? So pretty interesting. I don't know if you've seen this, but there is a looming, I don't really want to call it a war. That's just disrespectful to the word war. Battle, maybe. Battle between the listings of Chinese companies on the American stock exchanges, right? After that coffee company's debacle, frankly, lying about sales. There's been a legislation passed to potentially delist Chinese companies, right? That we've sort of fired that round yesterday or the day before. And then Baidu, probably the most recognizable, it's kind of the Amazon of China, came out and said, you know what? We're going to probably delist from the NASDAQ. So this battle between China and the U.S. is probably going to rage on. I think it's going to rage on through the election. Our current executive branch needs somebody to battle. And he's clearly focused on Biden, number one, but I think China is going to be his number two. So we're going to hear a lot of China bashing, I think, going up. Don't know if you saw it this week, but Uber had another round of layoffs this week. So it's kind of the second round. 3,000 people were laid off. It's interesting because where I see the cuts, it was where they were kind of trying to create, essentially. Not to be disrespectful, but that's what it kind of is. And I don't know what that means, right? They're already going after GrubHub. I'm hearing in the Valley that they're a lot closer on price. It wouldn't surprise me if GrubHub and Uber announced, I don't know if it'll be an acquisition or they might spin it differently. But I would expect something this weekend as of interest. They just can't keep it out in the public domain forever. The deal could easily fall apart. I hear they're close on price. They're probably negotiating golden handcuffs or severances for folks at this or that place. But where I'm going with this is I'm wondering if Uber is getting smaller so they can go do more GrubHub acquisitions. Because when you look at Uber and they're kind of being the platform for delivery, right, or transportation, that's a very innovative approach, right? Going from being taxis to freight to food delivery to all of that. So maybe what they're going to do is they're going to just go on an acquisition binge, right? They've raised a couple of $1 billion less than 60 days ago. So it will be interesting. And GrubHub could be the first, arrow in their quiver. So we shall see. The other thing, I don't know if you saw this, but we had an IPO this morning. Insurance Select or Select Quote. Select Quote went out. A virtual IPO, right? When I saw it this morning, it was trading above 20, which was above its quote strike price. So again, this is happening. We had an IPO, which is, I don't remember the last IPO we had. I don't know. Can you guys think of the last IPO we had? Anyways, and then the last thing, TikTok. TikTok valued at $125 billion. They just landed a new CEO, I think from Disney streaming, I think. So it is, it's crazy. TikTok is exploding. I heard somebody say it's the fastest growing large company out there. I have no way to validate that. Didn't bother looking it up. I have checked out TikTok. It's kind of entertaining, I guess, if you want to just waste 15, 30 seconds. But again, who am I to say what's going on? So again, TikTok, $125 billion. Very, very cool. So in the end, May 21st, financial news, a lot going on. I would tell you more green shoots than not. I think the S&P within 1% of the 200-day moving average is going to be game changing if it can hold that. If you are a bull in the stock market, I'm guessing you're looking at that as a threshold, and if you break it, can you hold it? I do think we see some struggles in big box retailers. Oil above 32, that's important. Home sales, I'm gonna have to look into this home sales because again, 41% multiple offers. Again, I think the single family home is going to be where you want to be, and it's I just can't see why it doesn't work. And again, I think the whole idea of 4 greenhouses, 1 red hotel is the strategy. I think the next 2 to 3 years is about buying greenhouses. And then when multifamily cracks because of bridge loans and other, cap rate expansions and value collapse, you maybe a 1031 into apartments. And if you don't know, that was a key to our growth. We were just buying houses because I didn't know any better. I didn't know any better. And then when they got crazy expensive, we did 1031 exchanges into apartments. So that's likely what I am going to do. All right, everybody, that's the day. Have fun. I am going to probably do a live stream on single family homes, but I got to collect my thoughts first. Have a great day.